Stock market update, and it's actually quite positive. So getting straight into it, this is what it looks like. Everything's still expensive. Where's the positive in that, Alpesh? I'll come to that in a second. It's actually not the expense of the market which is leading it higher and certainly giving us enough opportunities, whilst there are some stocks which you wouldn't want to go near, and I'll come to those in a second as well. Energy is cheap, so are banks, yet again, and still. This is the share price relative to the profits a company makes, and the higher the number, well, the more expensive you're paying in share price for owning profits. Of course, as you know, I don't just look at that. I look at valuation, revenue growth, profit growth, dividend deals, cash return on capital invested, so cash flow. I look at momentum, because there is some evidence from Citigroup that momentum is important, but not the only thing. Similarly, value is important, but not the only thing, and not guaranteed to see share prices rise. Sortino and Alpha are also important to me. And then there's a lot of other information which is nice to have, but not essential. So let's look at price earnings growth ratios. Share price compared to growth in profits. And performance, before we do that, by the way, performance this week, bit mixed, nothing much to write home about. But when we look at those pegs, we want those to be above below one for it to be undervalued. And there's very few stocks like that. Most are overvalued. So if the market wanted an excuse, then it's got it. Have we done so far this year? And before I get into that, don't forget alpeshpatel.com/links is where you want to look to get more free resources. Have a look at my great investments program. And speaking of which, the students on there, some of them have managed to double their pensions this year because the Nasdaq's up 40% and they've been able to cherry pick those stocks. The S&P, for the more risk cautious, risk averse, up 16% there. So it's been a good year, just as was 2021. 2022 wasn't that great. But those other two good years more than made up for it and allowed us to catch up and get some strong returns. So how does it look so far? Well, for the S&P 500, September doesn't tend to be a good month. However, it has bounced off the support that it's had on that beautiful little line over there. And I can zoom in and you can see it even better. That support line. Worst case scenario I've marked on the chart. I don't think that's going to happen. More importantly, these are the weekly and monthly MACDs. Now people say to me, oh, but isn't that a lagging indicator? They clearly don't know that I've written 18 books on investing and I don't use these indicators the way the textbooks do. So here we go. The simple maths of it is, and the reason I use them, by the way, is because they're actually very good. The simple maths of it is that the monthly MACD, the blue dotted line, is rising, and that suggests stronger momentum, and it tends to be a more important, though slower, indicator than the weekly. Now, if you want a less important but more sensitive indicator, then you've got the stochastics, and you've got the weekly and monthly here, and they are, yes, overbought, which is why, if you were to ask me, in the short term, we've got downward pressure. In the longer term, which is these, we are still on a rise. It's as simple as that. So in the short term, i.e. September, we've got some selling pressure. Longer term, it looks more positive. FTSE 100, I've said it before, could drop off like this because I'm anticipating this to happen. However, there have been times, such as here, where the falls are less shallow and then it resumes upwards. Whereas, and I don't think this is the case, you could get this scenario, which is similar to that one, where it drops off a lot, and I don't think we've got that happening here. Okay, Apple, put a gun to my head, I would buy some more now. Would I be more risk cautious and dollar cost average? Yeah, in an ideal situation, I would. If I already own it, which I do, I'd continue holding it. The monthly MACD, I suspect, will do this, despite the fact that the weekly is looking to drop a bit more before rising. And we've seen the scenario many times before. You can look for those sort of patterns over here, for instance, and it does after a small fall. Today is a microcosm of this. Okay, it's a microcosm of that. So I'm still positive on it, and the analysts certainly are. That's what they think. That's the price. That's what the average analyst thinks. That's what the high mark is. And if the average analyst is right, that's your return potential. So looking at Alphabet, would I buy more today? Yes. I own it, so I continue holding it, and I anticipate this to happen, which is pretty good. So if I do get a down week this week, I'm not panicking or worried. I know the banks think it's going to be a good time to hold it going into the future. But yes, September might be negative, but I won't panic. Right, simple. Microsoft now. Well, Microsoft has done this. Now, the issue really begins, is it that? Is this a bear trap? Or is it more likely to do this? Or, of course, something in between? Well, reading all of this, we have got some downward pressure on this because the weekly MACD is falling, but the monthly is rising. And so I'm more prone to say it'll probably be something closer to that, the second arrow. I don't think it's going to have a big fall. I don't think it's going to have a massive rally in the near term. Would I buy more if you put a gun to my head? Yes, I would buy more today, or I would dollar cost average into it as well. Return potential, 18% to the upside, say the analysts, they're lowballing that. Amazon, I like even more. I would definitely buy more today, even though there could be some short-term downward pressure. So if you look at this a month from now, you may well expect Amazon to drop. And you might as well, wait a minute, I'll just wait till October. Yeah, sure, watch my weekly updates, more stocks to come. Watch my weekly updates on my Telegram channel. Have a look at alpeshpatel.com/links to see where I broadcast on YouTube and so on. And you might wait, but if you don't have the time, you just buy it today. 22% to the upside with that. Now, Disney is one where it's at multi-year lows, and we've seen when it's done that before, it's had this fourfold rise in price. Is that going to happen right now? I don't know, but I wouldn't buy it today. All right. And September and October tend to be pretty ugly for it. All the banks think it's got much to the upside to go, and they think 35% to the upside, but I wouldn't buy it today. I'd wait and wait for my broadcast next week, and it might be that we need to wait for it the week after. It's a $143 billion company with a price earnings ratio of only a 17 multiple. Nvidia, now with this one, if you already hold it, there's two things. Do I hold it? Do you hold it rather, or do you not hold it? If you already hold it, then if you're risk loving, you continue holding it. If you are risk averse, you say, well, if it drops 10%, I will sell X%. If it drops 20%, I will sell Y%, depending on your risk appetite. If it drops, I don't know, 50%, I will sell Z%, all depending on your risk appetite. Okay, if you are risk loving, you don't already hold it, or even if you're looking to deploy more cash, you would buy more, obviously, because you're risk loving by definition. If you're risk averse, you'd dollar cost average. Sorry, if you're risk averse, you wouldn't even get in. And if you're risk neutral, you'd dollar cost average, right? Look at that, look at those numbers, and that gives you some idea. So what do you do if you've got cash and you think you've missed the boat? Well, if you're risk loving, you get in. If you're risk averse, you don't. And if you're risk in the middle, you would dollar cost average. In other words, maybe over 5 months, I'll put a fifth in this month, a fifth next month, a fifth the month after. Can I tell you what the right answer is? Yeah, in hindsight, well, that isn't much bloody use to anybody, is it? But personally, what would I do? Well, I already own it and I continue holding it. And if I didn't, I would dollar cost average into this, okay? That's me. So there you go, and that's the 37% to the upside. Tesla has come off that and looks like it's gonna probably do this and do that and do this. Certainly that's relatively positive news, isn't it? Okay, so all good there on that front. This has fallen, then risen a little bit. That weekly is likely to go lower, so don't be surprised if this falls even below this low before going upwards, and that'll fool people into panicking, worrying, and all the rest of it. But if you put a gun to my head, I'd buy some today. Ideally, I would dollar cost average in. I already own it, so I'm going to continue holding it. All right. If you're risk averse, you would say if it drops X, I will sell Y%. So now you know the strategy and what to do. 22% to the upside, say the analysts. ServiceNow, I like very much, and hell yes, I'd buy more today, and in fact, I might buy more on Monday. So just give you an idea of just how we analyze things. Of course, on the Great Investments Program, we go into a lot more stocks and a lot more detail, and I go through a lot of things beyond what I'm just doing in a little bit of a rush here. So Cisco, continue liking. Those are the projections. And of course, this isn't done, as I've said before, on just purely technicals or charts. It is done on the fundamentals. Have a look at campaignforamillion.com. It is done on the fundamentals of going through with all of these, all of this stuff that you see on screen. And then I've just picked a few, handpicked a few just to illustrate those. Have a look at campaignforamillion.com. Have a look at alpeshpatel.com/links as well. Thank you very much. Hope you enjoyed that. Tell your friends.